Welcome to Target Alignment, Episode 2, and today we're going to be talking about my Forex strategy. So, essentially, if the idea behind target alignment is that you have to constantly align yourself with the target, then the way we're going to do that is with a strategy, right? And the strategy is not only going to tell me how I'm going to place every single trade, but it's also going to outline some things for my general trading experience and to optimize for fast learning or whatever I want to optimize for the target essentially. And so first I'm going to start out by talking about the general trading guidelines that I've set for myself. These are guidelines that are specifically meant to improve not just the trade, but more specifically the learning process and optimize for, I guess, this channel as well. So number one thing that I have to do is record every single trade, because that allows me to not only share it with you guys, but also it allows me to look back at every single trade that I have placed and understand the mindset that went behind every single trade. The second one is minimal input from other traders, and although this may seem counterintuitive, the whole idea behind it is that you have the information in your head already. You've probably watched enough YouTube videos to where you can probably start making conjectures and figure these things out on your own. If you cram yourself with too much information, you're not doing yourself any good, right? So that's the second point. The third point is that you have to avoid major pairs. At least that's what I'm doing, because major pairs are typically where the big banks like to screw people over the most, and I'm, as an somewhat inexperienced trader, I'm probably not ready for that type of stuff. And so the fourth point is familiar environments, right? So the reason why this is important is because, and this also seems counterintuitive, but in order to decrease my risks in each trade, I want to recognize the environment so that I can better understand each environment. And the reason why that seems counterintuitive is because if I want to learn more, wouldn't I want to put myself in different environments? But my counter argument to that, and the reason why I'm doing this, is because every environment, although familiar, is slightly different, and then that experience will be slightly different from the next one, and so on. And then essentially I will have branched outwards, and essentially I will learn as much as if I learned in other areas, just slowly. And the other thing is filter out the noise, right? So there's a lot of things in the Forex market that don't matter, a lot of things with the price action, the news, etc., etc. And then there is justify everything that matters, right? So everything that does matter, you want to not only acknowledge the things that matter, but you also want to explain their significance in the Forex market, so that way you can understand, well, just to better help you articulate the importance of the things in that market. So, and then last one is confirmation, right? So you need, I'm giving myself at least 3 confirmations to give me the green to trade, to place a trade, and so that way to ensure, or I guess manage risks. And now let's talk about fundamentals, right? So these are the things that, this is right before I place any trade. The first thing that I want to do is look at the fundamentals, right? So first of all, let's go over the economic analysis and situation, right? So what I will be doing for this is I'll probably be heading over to Forex Factory. In today's pair, we'll be trading, or at least for an example, today I've been trading New Zealand dollar against the Japanese yen. So I will go to Forex Factory and I'll filter out specifically for that, and then it allows me to see the news events that are happening down here. It also allows you to see the news events that are coming up over here in that time frame. It seems like, well, today's Saturday, so there's nothing going on, but yeah, that's essentially what I'll do for checking major news events and that type of stuff. And yeah, so there's that. Although I will say, however, I don't believe that Forex news is a big factor in determining price action for sure. I think if anything, it just allows, news is just an excuse for market makers to execute and do what they already had planned in mind. So that's pretty much it. I don't really pay attention to the news unless it's some extremely report, something to do with like monetary policy. I don't know. I don't exactly know too much about that stuff, but I don't think it's that important that I do so far. And then there's this one is perhaps the most important thing about my fundamental analysis. It's the COT reports. So as you can see, I have this very fancy Excel sheet right here, and so this is actually fairly easy to make. You just go to go to the website right here, cftc.gov, and you get the information from the commitments of traders, essentially, right? So this is where the hedge funds are placing their positions, and you could say that the hedge funds really know what they're doing because they're large corporations that are trying to make themselves and their clients money. So that's probably very important that we listen to where these hedge funds are committed to, right? So this shows you right here kind of like the net positions that they're taking every single day. Right here we have, yeah, you get the idea. So, and then lastly for fundamental analysis is the market sentiment. The market sentiment is probably not very important, but I think, surprisingly enough, as you can see in a lot of these assets, this is actually dailyfx.com, and they basically are a trading platform that that show the information of where their clients are committed, or essentially committed to as well, like what positions they're about to take and what orders they have. And so it kind of tells you right here, like these guys are going long they're going long right here. Meanwhile, when price actually spiked, they were all going short, right? So because market makers like to play these retail traders, right? Because a lot of these retail traders don't know what they're doing, and so they end up losing a lot of money. And you can see that right there in that divergence that, a lot of traders went short when the pair went long. So there's that. Essentially, the idea is that you want to stay away if too much people are going too long, because that's often or too short to one extreme, you often want to go the other way. Not exactly, but you take that with a grain of salt, but it allows you to know, kind of what's going on with the whole environment around you in terms of, where people are, where other retail traders are positioning themselves, right? So now technical analysis. So this is probably the most important part, of course. And these sound kind of fancy. I just made these terms up: bullish to bearish, trend placement, relativity. So I'll give you guys an example of what I mean by that. So let's see here, right? So on the daily, we have somewhat of an uptrend, and we've broken that uptrend, and it seems like we've retested that same uptrend. Now we're on a downtrend. We're on a downtrend on the 4 hour, right? On the 4 hour, it seems like price action is respecting this level right here, and so essentially from 4 hour perspective, we're bearish, but from a daily perspective, we're bullish pretty much, and then from a weekly perspective, we're actually in a channel, right? So and then that allows you to understand basically like where price action is headed, right? So so it makes sense if we've already tested the top of this channel right here when we're on all the way down. It's expected that the next target will be somewhere along the bottom of this channel, and therefore the most important part is the fact that we are placed on from a weekly perspective on a bearish outlook, essentially, right? And so even here you have that right here, that uptrend and that downtrend, and so like essentially the placement is very bearish because we keep on following that downtrend, and so what's expected is, it gives you the overall relativity in the markets where price action is headed. And then there's Fibonacci related behavioral predictions, right? So this is simply so right here I've outlined these are actually Fibonacci levels. So right here we have the 50%, the 61%, and the 32% or something like that. And these are essentially retracement levels. And so when price action starts to get around here, we can expect retracement, probably price action bouncing somewhere around here. so we can understand that. And we also understand that Fibonacci levels are quite attractive to price action, so we'll understand that if price action heads here, then it'll probably make its move down to here as well. So, just kind of understanding price action in relation to Fibonacci levels, because that's where price action is most likely to hit. And then general strength-based predictions. So the reason why I have these both in conjunction is because there's certain Fibonacci levels and there's certain structural levels that are stronger than others. And if you have a structural level and a Fibonacci level, what I mean by that is if you have, like, let's say, I'll give you guys an example from a 4-hour perspective. So right here, it seems like price is kind of swinging around here. We've kind of tested down here at this point, and then so on. We kind of want to test right here. And so that in itself, not only is it a Fibonacci level, but it's a structural level that is being tested by price action. So the more that level is tested, the stronger it becomes, right? And so the stronger it becomes, the I guess the greater of an effect the price will move greater once this level is broken. So, or there's certain things like the stronger the trend, the stronger the line is, the stronger support or resistance line, the less likely price action is to break that line, or the more likely it is to retest it. So that type of stuff, right? And then finally, there is simplified pattern identification. So this is simply, I'm not talking about like any harmonic like butterfly patterns. At most, I'm talking about like head and shoulders, right? Basic things, very, very basic things, right? So I'll give you an example, guys, right here. So it's kind of hard to see, but you typically have that like W formation, kind of like a double bottom right here, and then you basically that double bottom sets a neckline, and then usually retest that neckline and go up. Right, so that's one basic pattern. There's probably many more. This to me kind of looks like head and shoulders, although it's not quite clear where the neckline is, so it's probably not a pattern. But these things, we're not understanding patterns to make predictions. We're understanding patterns to understand price action, right? So here we've set a like neckline, and that helps us better understand the what the market's doing, right? So we're moving up, and in the process, we are making waves, and we're retesting certain levels, that type of stuff. So that's the whole idea there. And then now, in order to gain confirmation, right, because we need 3 confirmations, often I'll look for 1 confirmation in my indicators, right? So as of right now, I only have the RSI open, but let's see. From a weekly perspective, we are actually kind of, let's see, we're about like 51 on the on the RSI. So right here, it is, we can definitely see a continuation down to this level right here, the 30, whatever. Seems that we haven't been there for quite a while now. So it could be expected that we, it's a likely scenario in this case. I would consider this a positive confirmation from the RSI. Number 2 is candlestick patterns, right? So, of course, I think those are pretty important as well, because candlesticks essentially let you know what's going on a smaller time frame, right? So right here we have, the double tweezer pattern or whatever. I mean, I can't really see the other wick, but we have very strong downside, very strong upside. So that's often a pattern of a strong reversal. And here we have like a doji, for example. Let's check on the daily perspective. Daily perspective, we've actually closed on a doji, so that shows exhaustion, right? So there's certain things. Not only does price action, not only do patterns help us understand what's going on with price action, but or help us understand what's going on with price action, but it also gives you confirmation if that pattern or that candlestick confirms your the possible trade directions or whatever. And now finally we have divergences, right? So this is simply, and I do not understand divergences too much, so I'll probably have to do a little bit more studying up on that before I do some in-depth analysis videos, so that way I can explain it better. But basically I have right here market's in an uptrend, and so does the RSI verify that uptrend. If there's no divergences between these, then it's likely that there is no divergence. If there is, then is that divergence a bearish divergence or bullish divergence? And depending on that, it'll give us more confirmation, right? So now finally, we have execution. So this is probably the most important part, of course, because we obviously want to, make profits on this trade. So the first thing we have to do is identify potential wick hunting spots. So usually, I mean, this is, since we are trading, I've placed my trades positions on a smaller time frame. It's not really too much to worry about usually, but I mean, still a possibility nevertheless, where the market makers like to, they like to throw wicks up here, down there to trigger stop losses. And so I think that's pretty important. It's pretty important to position yourself so that doesn't happen, whether that be through a limit order, right? So right here, that limit order would have actually been triggered, surprisingly enough. I was not expecting price action to go down there, but it was still triggered, right? So, and then we would have taken a loss in that, and that's the whole idea, just positioning yourself so that way, certain things are triggered at the right time before, like to avoid breakouts or false breakouts and that type of stuff. So, and let's see, then there's a 3-to-1 ratio. Obviously, we want to see where we can fit a 3-to-1 ratio anywhere. So that way, because I think 3-to-1 ratios are very important for preventing losses. This is actually not a 3-to-1 ratio, so wouldn't even be valid here. I might take this trade, I might not, but I think just to play it safe, I probably would not. But anything above a 2 at least allows it to break even for the most part. But right here we have, we have pretty close to a 3. Yeah, actually, exactly a 3-to-1 ratio. So that's one place where I could have fit a 3-to-1 ratio. I kind of rushed this, so just wanted to use it for an example. This is probably not the best trend placement, or short placement. And of course, last but not least, there is the 4% risk or account balance risk. Obviously, we don't want to, we want to keep a large amount of margin with us at all times so that we can keep on making trades. And so, in order to ensure that, you don't want to be losing large amounts of money from your account at once. So, in order to keep us in the game for a long time, we have to place ourselves and not take risks that risk more, or at least place your stop losses to where it doesn't risk more than 2 to 4% of the balance in your account. So that's pretty much it for right there. That's basically my strategy. So that way, these are the things that I will be following, and you will see on every in-depth analysis that I do. And yeah, so that's pretty much it. See ya.